Welcome to CNBC. I'm Amit Singh, helping you track the latest in the Middle East and the market impact. Markets across Asia are selling off, and U.S. equities indicating a downside tonight as the U.S. and Israel began a third day of strikes on Israel. President Trump saying combat operations in Iran will continue until the job is done. Iran retaliating with attacks across the region, targeting U.S. allies and assets. Israel and Hezbollah also exchanging fire. All this uncertainty and volatility pushing oil prices higher. Big gains in the Brent and WTI benchmarks, lifting energy stocks across the region. Well, let's just start with a quick look at the Asian markets. It's really no trade in South Korea today, but for the rest of the markets, it's red across the board as expected. Remember, traders reacting to U.S. and Israel strikes on Iran, Tehran's retaliation, of course, and all the uncertainty about the way forward. At this point, it's airline stocks that lead losses across Asia. Higher oil prices, unsettled travel markets, rerouting, all getting factored in. Energy and defense stocks, of course, are the bright spot after oil prices jumped as much as 10% in early Asia trade. And we're joined right now by Seema Modi, joining us live from our headquarters in Englewood Cliffs in New Jersey. Seema, you have been tracking the possible impact of the latest developments in the Middle East on emerging markets in Asia, including India. Just give us the latest.
Well, Amitoj, as you know, emerging markets have proven to be a very hot trade for U.S. investors, not just in 2026, but over the past year, outperforming the S&P, largely due to a somewhat stable geopolitical backdrop. So the events have taken place over the last 48 hours, certainly giving investors pause. We've been speaking to a number of fund managers here in New York, assessing the situation, figuring out how much exposure they want to have to emerging markets. And I think their biggest takeaway is, as they watch the price of crude shoot higher here, is what the impact could be on inflation long term. Now, that may really just depend on how long we see oil prices sustain this level of volatility. But in the meantime, as we know, emerging markets tend to be quite vulnerable to higher oil prices, and the impact on inflation can can have a more dramatic impact than perhaps other developed nations. So watching the impact on inflation and how that could have a cascading effect on perhaps interest rate policy making was something that investors are certainly watching. And of course, also the stronger dollar. A number of emerging markets still sit on a high level of dollar-denominated debt. If we see the dollar continue to rise, that puts more pressure on these countries as well and their FX reserves. So there's a lot that investors are looking at right now. Again, when we started the year, emerging markets were one of the top trades for a lot of fund managers in the U.S. because of what's happening on this side of the woods. So I think for now, investors are trying to see what happens next and will assess accordingly. Now, as it relates to India, as I know you're watching as well, my sources in New Delhi say the government is very closely watching what is taking place across Iran and watching what will perhaps happen around the Strait of Hormuz. While India does not import as much oil from Iran as it did many years ago, it still gets about 30 to 50% of the oil that comes from many of its Middle East partners through that passageway. So any impact on shipping routes, trading, that certainly could have an effect not just on India, but China as well.
All right, thanks so much for that, Seema. Really appreciate you joining us. Now, it's early hours still, but U.S. futures, we've got to keep an eye on them. Stock futures, remember, tumbled in overnight trading after the weekend, and strikes in Iran. The futures on the Dow Jones Industrial Average dropped about 500 points. At this point in time, it's suggesting it's going to drop about 370 or so points, losing about 1% earlier. And NASDAQ 100 futures declined a little more than 1% at this point in time. It's suggesting a 200 or so points drop. Now, oil did trade higher by 12% at market open. Of course, now pairing gains, but looking like this as we speak. It was as much as 7-8% just about half an hour, 1 hour ago. At this point in time, it's 4.5% across the board, more or less. And let's just go straight across to CNBC's Access Middle East anchor, Dan Murphy, who's joining us from Dubai. Dan, strikes across the Middle East after the U.S. and Israel military, struck Iran, and Tehran's retaliation followed. Help us unpack all of this, and what are you seeing across Dubai?
Amisoj, good morning to you. Well, residents in the Gulf capitals, including here in Dubai, really waking up this morning and wondering where this conflict will go next after what has been a really intense weekend of strikes between Iran, Israel and the United States. Of course, Iran launching hundreds of drones and missiles across the region at the weekend, targeting US bases and critical infrastructure in the Gulf states and in Israel. At the same time, the conflict is also spreading across multiple fronts now. Hezbollah, the Iranian proxy in Lebanon, saying it struck an Israeli missile defense site in retaliation for the killing of Iran's supreme leader. The Israeli military also saying it is now striking Hezbollah targets inside Lebanon. And this escalation has also been felt across the Gulf as well. Iranian drone strikes have been targeting civilian and commercial infrastructure and shipping routes, including attacks on commercial vessels near the Strait of Hormuz. That is, of course, a critical choke point for global energy supplies, and part of the reason that we have seen what was a double-digit spike earlier in the price of oil. US Central Command also confirming 3 US service members have been killed, 5 more have been seriously wounded. President Donald Trump speaking earlier also saying there will likely be more American casualties before this operation ends. And the president also giving us a window into his current thinking regarding the timeline. He says this bombing campaign could continue throughout the week, or, he says, as long as necessary. Washington also now preparing lawmakers for the next phase, and we understand members of Congress are set to receive briefings from the Secretary of State Marco Rubio, Defense Secretary Pete Hegseth, the CIA Director John Ratcliffe, and the Chairman of the Joint Chiefs of Staff, seeking to ease criticism out there now that the president started this war without actually articulating an end game and also without congressional approval. It also comes, of course, less than a year after President Trump declared Iran's nuclear program had been obliterated following those US strikes last June. So plenty of questions being asked among lawmakers and the American public now about why this is happening. The United States also once again carrying out military operations inside Iran, despite the fact that the president had said that program had been obliterated. Meanwhile, the political situation inside Iran also really entering uncharted territory now after the killing of the supreme leader. The country is essentially being run in this moment by a temporary leadership council, which includes President Masoud Pezeshkian. The big question is what is going to happen next. President Trump, we know, has called on Iranians to rise up and overthrow their government, really framing this war in part around the future of the Islamic Republic itself. But history raises really complicated questions about that approach, from Afghanistan to Iraq to Libya. America's experience with regime change has been fraught and often unpredictable, to say the least. So for now, the region really appears to be entering a new phase here, a new uncertain phase as well, with multiple military fronts opening up and the leadership of one of the Middle East's most powerful states of 90 million people suddenly in transition. Amitaj?
Thanks so much for that, Dan. And as we know, in terms of expats, the most number of expats from any country is from India in that entire Gulf region. Dan, stay right with us. We're going to be, having you join this next conversation to bring in all the questions that are emerging from the Gulf angle. Ellen Wald is the president of Transversal Consulting and joins us for more on this. Ellen, thanks so much for doing this. I really appreciate it. And from what I understand, you've been tracking all the ships that are in that Strait of Hormuz or in that region at least. Can you paint a picture of the scale of the disruption so far? Hundreds of ships have dropped anchor, but what else are you learning?
Yeah, exactly. I mean, we're seeing almost entire stoppage of transit through the Strait of Hormuz at this point. There are over 150 ships that are just waiting in the waters to see what's going to happen. A lot of them have seen their insurance rates skyrocket since this war has started, and are very hesitant to pay that extra money just to transverse the strait. So they're basically in a wait and see mode. I think we've seen a total of 7 fairly small tankers go through the straits, all Iranian or Chinese, I believe. So essentially what we're seeing is a total stoppage of traffic through the straits. Now, this is not necessarily due to any kind of closure. Certainly there have been threats. There's a constant, military barrage, but it's really due to the risk and the fear, and also the extremely high insurance rates.
Ellen, Dan also joining the conversation. Good morning to you. With regards to the price premium, the geopolitical risk premium that we're seeing in crude right now, interesting to note historically, not as much as what we saw off the back of the Abqaiq attacks many years ago. Why do you think that's the case? And to what extent did OPEC actually play a role here, adding more barrels before the market open and perhaps alleviating what would have been 100 USD oil?
Yeah, I think it's really interesting because I've very frequently been, on the side of kind of calling the market out for overreacting to these kinds of threats. In the instance of Abqaiq, I said, this really isn't going to be that long an outage. There are lots of other ways for the Saudis to get oil out of Saudi Arabia. We're not going to see a huge disruption here. The same with the, in the strikes that we saw in the summertime, this past summer. But now I really do think that the market is potentially underpricing the risk here. If these tankers are remaining stationary for a week, possibly 2 weeks, the president has indicated that the military action could last as long as 4 weeks. There are going to be some serious repercussions of this, particularly in Asia. I mean, Asia is absolutely most reliant on products from the Persian Gulf, both crude and products, as well as LNG. And so really, if they're planning on this kind of disruption lasting as long as a month, they really need to be working on ways to alleviate this, ways to get tankers moving through the straits safely so that we don't see any kind of widespread disruptions in terms of crude oil, of energy, price spikes that could potentially cause economic disruption, particularly in Asia. And I do think it's very interesting to see that they don't seem all that concerned about that. And I would either that says they're not planning on these disruptions actually lasting that long. They have plans in place, or they're not prepared for it. OPEC, on its part, seems quite concerned. They very early on increased production quotas by not that much, but enough to show that they're certainly willing to do more should the opportunity or the need arise. And I do think that is helpful. It seems to me the market is really saying, hey, we expected there to be some kind of widespread attacks on actual oil infrastructure. But I think what they may not realize is even though if oil infrastructure isn't directly impacted, just the fact that we've got this backlog of tankers sitting there, it's going to get bigger and bigger. This can still cause a fairly significant disruption.
Right, and I think it's a really good point. You mentioned the fact that we haven't seen, as far as we know, direct strikes on energy infrastructure, which would be a catalyst for higher highs in the price of oil. Ellen, just give me your back of the napkin assessment here. Because we have seen OPEC adding barrels and because we haven't seen strikes on infrastructure, what do you think the geopolitical risk premium currently is in the price of oil right now? And where should oil be trading if the Strait of Hormuz is going to be blocked for an extended period, as you predict?
That's a very good question. I think that, a week's worth of disruptions, I think we're probably at a good level right now. If we're going past 2 weeks, I would not be surprised. I think oil should be more in the $85, potentially working towards $90 a barrel range if we're inching closer to a month. I do think that the potential for the strikes to expand to hit oil infrastructure is still there, particularly if the Iranian military structure has fragmented. There are some indications that the central command is not necessarily in complete control of the various units. And so oil infrastructure could be hit even if the central command doesn't necessarily give that order. And if, say, Emirati or Saudi infrastructure is hit, that could lead to retaliation, and we could be looking at a whole new ballgame.
Ellen, just going back to what you were saying earlier, that the real concern isn't that the over 150 vessels that are waiting to traverse the strait will get attacked. Sure, the threat is real with at least 3 ships having been attacked. It's that war risk insurers are shooting up prices for all ships, in some cases submitting cancellation notices. So assuming that this is a prolonged war, what would it take to stop the war risk insurers from cancelling these contracts? What could Donald Trump do?
That's a great question. I think there is actually a lot he can do. The very first thing he can do is to offer a military escort to certain tankers to show that with American naval presence helping those tankers, that they can traverse the straits, they can traverse the straits safely. And also there is a great potential that the route that ships follow is not the only route through the strait. They can go through Omani waters. So President Trump should reach out to Oman and see if they're interested in opening their waterway to international oil tanker travel. They can go through there. It's deep enough. And if there's an American military presence protecting it, they can absolutely reroute these ships out of Iranian waters and get them through the Strait of Hormuz safely. And I think that could be done in a fairly organized fashion. Obviously, they need to work out ways for everybody to be safe, to know where they are with the GPS systems. But I think that can be done. We can also see OPEC make more production increases. Obviously, only certain nations are going to be able to produce and export more oil. They can also arrange coordinated SPR releases through the IEA, which is exactly what the IEA is intended to do anyway, to ensure that nations that are very dependent on oil imports from the Middle East, like Japan, are able to access the supplies that they need in the long run. And that would go a long way towards the market feeling comfortable with workarounds and that they're not going to be stuck for 4+ weeks here.
Ellen, what's the translation for Russia and China? And how closely is this situation being viewed in those countries?
Yeah, that's a really good question. They have got to be really on top of this. I mean, Putin's got to be thrilled, because anything that raises the price of oil is good for him. He's definitely able to say, look, if you can't get oil from the Gulf, hey, we've got a great supply. Yeah, you've got to deal with Trump and these sanctions, but he's kind of busy at the moment, so please buy our oil. So he's definitely happy with the situation, I'd say, although once it's resolved, Trump is definitely going to turn his eyes toward Putin next. I do think that China is a bit in a bind. Some of its ships are getting through, but remember, it's not just the oil that China is buying from Iran. China is buying a huge amount of oil from other Middle Eastern producers. And if it is starting to sense that it's not getting the supplies that it needs, I think it can actually bring a fair amount of pressure diplomatically, economically on Iran, for example, to bring an end to this crisis, or at least tone things down enough such that insurance rates go down and tankers can continue on their way.
Ellen, our reporter Seema Modi just told us a short while ago that she's been in touch with her sources in New Delhi, indicating that they are watching what's happening in the Strait of Hormuz very closely. And when you talk about translations about Russia and China, I want you to translate this in terms of India. What does it mean for India when you've had the fog of how much oil India is buying from Russia under the pressure of the US, with oil expected to touch potentially 100 per barrel? Will India really go back to buying Russian oil?
I mean, this is really bad timing, because, India says it's committed to stop buying Russian oil. And then the next thing you know, we're seeing this stoppage of oil from the Persian Gulf. I would say it's really bad timing for them. And I wouldn't say, I definitely think that India's oil purchases will be under the microscope if they choose to load additional cargoes from Russia. That's definitely going to be scrutinized. But at the same time, I have a feeling that no one's going to really fault them for doing what they need to get through the next month, given that this disruption was not exactly telegraphed, when Trump and Modi were making this deal, and they were coming out with this expectation to stop buying Russian oil. So I would say there's probably a little more leeway there than there was before.
Ellen, do you think this price spike is going to be short-lived? Because, again, looking at the winners and losers here, no doubt US shale also monitoring these price gains and wondering ultimately what it means for US production too.
I think U.S. shale is thrilled. I think they're probably surprised that it's not higher, though I really do think that the events of the next few days will be very telling for how things are going to go. If we don't see the conflict spreading beyond really military and political targets, then I think that the premium will probably see, maybe it'll settle a little bit higher, but we're not going to see any absolutely massive spikes. We're not going to see triple-digit oil unless oil infrastructure is being directly targeted. On U.S. shale, they're thrilled. They're probably saying, "Hey, let's call up those people we laid off. Let's put those rigs that we were planning to slow down or shut in. Let's make sure that those are back on track, producing because they're going to want to sell everything that they can while these higher prices are available."
In terms of timeline, I just want to understand from you how long could this last? If the Houthis, remember, disrupted the Red Sea for close to 3 years, how long can Iran realistically shut down the Strait of Hormuz? And of course, I mean effectively shut down.
So I don't think Iran is really effectively shutting it down. It's more the risk to tankers, and that risk is considered quite high, such that no one's willing to actually pay the insurance premium to get through the Strait of Hormuz. Once we see a bunch of tankers that are willing to take that chance getting through safely, that risk might go down. So, or if we see concerted efforts made to assist tankers, to guide them, to provide military escorts, to ensure their safety, either by rerouting them around Iranian waters or in other ways, that risk could go down. At the same time, if the military barrage continues, it really depends on how long can Iran continue to send ballistic missiles to targets in the UAE or Saudi Arabia, then we'll still see that risk premium remain for as long as that goes on. President Trump has said 4 weeks, but his words, he wasn't particularly illuminative in what they're expecting this 4 weeks to mean. Did they mean 4 weeks of this kind of heavy military engagement, or does he mean 4 weeks until the entire operation is concluded? I think he's got a bit of explaining to do, and hopefully we'll get a little more clarity on that in the coming days.
Ellen Wald from Transversal Consulting, thanks so much for joining us with all that perspective. Dan, of course, thanks so much for joining us. We're going to come back to you as and when there are more developments in the UAE where you are. Thanks so much for that. Now, a quick check on gold because, well, it's a safe haven, right? Let's have a look at what's happening there. It has been rising for some time, and it's up about 1.5%. Silver also up about 0.5%. Platinum down about 0.3%, and palladium, well, fluctuating and volatile quite a lot. We're also watching market reaction in the crypto space because, well, Bitcoin has been seen historically as safe haven. But is it being seen as that right now when you have internet shutdowns in Iran? Not so much. It's just sticking around where it has been, between 65 and about 67 at 66, 685 or so right now. And the same goes for Ether, not really climbing above that 2,000 number. Well, at this point in time, let's just move on and give you a sense of what's going to be happening next. We're watching thousands of flights getting cancelled or diverted as Israeli and Iranian airstrikes continue for a third day, leaving hundreds of thousands of travelers stranded. Our travel and transport reporter, Monica Petrelli, is joining us with more on this. I just want to understand because I've been hearing lots of reports, from Indians particularly, because they're the largest expat community in the Gulf region. And you're getting information from them about them being stranded, but give us a sense of which airports are the worst hit.
So the worst hit airports in terms of, especially for Indian travelers, would be the ones that have the biggest arrivals for both tourism. We know that's big for Dubai, but also the workforce. So a lot of Indian nationals working in Saudi Arabia, Qatar, and Dubai and other parts of the UAE. And that's where we're really seeing the big effects. But we can also see the market now responding. We know how the travelers are feeling. I especially know how they felt because I got caught in Doha in the June retaliatory missile strikes from Iran. But that was minor leagues. This is the majors. This is a much bigger deal. We see the Asian carriers across the board really falling. I think maybe people taking their money out of the Asian carriers, putting it into the gold that you just talked about, Amatosh. But we see some of the biggest drops, the biggest sell-offs of the day among the Chinese carriers. That was earlier today. A lot of those now have paired losses back up. We can see a lot of the East Asian carriers, however, have leveled off. A lot of this between 4 to 6%. This from JAL, ANA, EVA, also a Cathay. Now, one airline that is bucking the trend, though, Virgin Australian. We see that up about 3%. But no such luck for Qantas. Qantas saying no flights affected by this issue. However, we know oil prices are surging. So we did see Qantas opening the day with a share drop of 10%. It's now some enterprising people have come in apparently and had purchased, and his losses now down just to about 5%. But cancellations now continuing for the third day. We're going to be watching both Emirates and Etihad. So they have suspended these two airlines have suspended flights to the early afternoon. Now, this has been a deadline that it has moved, but we can see the airlines there operating very carefully. Other airlines around the world taking a bigger, like precautionary stance and canceling just across the rest of the week.
Unbelievable how they're trying to be dynamic around this situation. Disproportionately speaking, is India probably going to be hit the hardest in the region?
The Indian carriers are hit hard, and because they fly to a lot of destinations in the Middle East. And I would say probably one of the hardest hit at this point is Air India. Now, we know Indigo, a big part of the expansion there is to go international. However, Indigo still flying somewhat east. It's Air India that is operating those long-haul flights to Europe and to North America. And so we've seen 3 rounds of cancellations really from Air India coming over the weekend. First saying, okay, flights to the Middle East are canceled. Then, okay, fine, some of these flights to the select flights to London, to New York canceled. But now the last one was, okay, we're now looking to cancel flights to Amsterdam, to Zurich, many other locations in Europe. Air India did say it will continue flying some. However, it says it'll have to fly longer routes. Now, we know this has been something that's been plaguing the airline for some time because of Pakistan air closure. Now, Air India hit by another hardship here with an even bigger portion of the Middle East as well as Pakistan off limits for its flights.
This is really bad timing for the airline sector in India particularly, which has already been under pressure. Thanks so much for that, Monica Petrelli, with all the latest on what's happening with the airlines and travel. The Indian markets come online later this hour. Gift Nifty futures are indicating at this point in time that it's set to open quite lower, sharply lower. Remember, it was around 25,178 at the close on Friday evening. And now it's headed for 25,166, closer to the 25,000 marks. The question is, will it be able to actually preserve being above 25,000? Futures indicating it will fall closer to the 25K. What will Indians think of it when they think of safe haven, remember, which is culturally something they really throng towards, which is gold. And the big concern is going to be how India recalibrates its sourcing of oil, given the pressure by the US to stop buying oil from Russia had seen India already diversify towards the Middle East, but the Strait of Hormuz now effectively shut. We'll take a short break and be back with lots more. Right, welcome back. Let's get straight to our East Asia reporter, Lisa Kim, on the latest market reaction in Asia. Lisa, how are the markets looking?
Hey, Mataj. So it's pretty much red across the board except Shanghai. So from Japan to Singapore, stocks are trading lower this morning. So the benchmark Nikkei 225, that is Japan's benchmark, and the broader Topics index both closed lower in the morning session, down more than 1.5%. It's about to come online from lunch break, so I'll continue to track how Japanese stocks fare today. Japanese automobile stocks are down this morning. They tend to rise when the yen is weaker, but that's not the case today because, according to a Nomura analyst, he told me that higher oil prices could potentially mean weaker sales over in the U.S. Japanese airline stocks are also down, this due to concerns about higher crude oil prices. On the other hand, energy stocks are sharply higher, such as Japan's Anos Holdings, Inpax, and Japan Petroleum Exploration. And also trading higher today, Australia's Woodside Energy Group and Santos, and of course Australia's gold mining companies are trading higher as well, including Northern Star Resources and Evolution Mining. Japanese shipping companies are trading higher today, and all of this is tied to the conflict that we are seeing over in the Middle East. Japan's chief cabinet secretary said this morning that he does not have any immediate plans to release some of those oil stockpile after the economy ministry said this morning that it has not received any requests for international cooperation to release a stockpile. Meanwhile, Prime Minister Sanae Takaichi said in a social media post that Japan will take measures to ensure any and all risks will be prepared to protect Japanese nationals in the Middle East. On the other hand, South Korea is offline today on a national holiday, but South Korea's Resources Ministry said in a statement released today that it will release its oil reserves if the situation worsens and calls for such a move.
All right, thanks so much for that, Lisa. Let's bring in Brian Jacobson. He's the Chief Economic Strategist at Enix Wealth Management. Really appreciate you joining us, Brian. It is an interesting time to speak about everything that's happening. I want to just get your first perspective on oil prices climbing up nearly 12 to 13%, but paring it back to, well, now 4%. This appears that traders don't believe that the worst possible outcome is the most likely outcome. Would you say so?
Yeah, thank you for having me. It's really an honor to be here. And I think that's absolutely right. The initial knee-jerk response was to see the prices go up about 13%, which was basically pricing in a complete stopping of the flow of oil through the Straits of Hormuz. But it does seem as though that worst-case scenario isn't likely going to play out. Now, time will tell, of course, because President Trump has said that this is likely going to play out over 4 to 5 weeks. But so far, it does seem as though some of the tankers, they're basically deciding not to go through, not that they're actually being attacked. And so I think that, at least in a little way, is a silver lining here.
Just talk to us a little bit about the outlook for emerging markets. How dynamic is it at this point in time?
Yeah, so emerging markets are an area that we've really liked all year and even last year. And this is a little bit of a challenge if you suddenly see higher energy prices. That, of course, will affect the purchasing power of consumers and those economies, putting some under strain, but also benefiting others who are net oil exporters. So in a way, when we think about a country like, let's say, with India being a net importer, China is particularly sensitive to oil prices, especially through that area, since about 38% of the oil that goes through the straits head towards China. So I think that you do have some areas that are perhaps negatively affected by this, but others, as long as this is somewhat short-lived, I think that it should be okay for their fundamentals.
Just want to dive a little deeper into what you said about China, because there are those who believe that because China has oil reserves for months, it's the most insulated in this situation.
Well, it could be, and that's one of the things that China has done, not just with oil, but other metals as well. A good chunk of last year, it did seem as though there was a lot of hoarding going on in terms of like with copper, other metals as well. So they have taken that approach about trying to stockpile some of these strategic resources that they might need, but they will eventually deplete those. And plus, we consider the opportunity cost of that resource that they have. So the market price goes up. It reflects the value of it. And so in a way, even though they have stockpiled it, they do have to still worry about some of the pressures that could be put on the consumers if this is more protracted.
Can you paint a story of the risks for the market across AI CAPEX? And I say this because we're thinking about margin pressures right now, and they could be increasing because base metal prices, they shoot up, private credit markets start to shake up, and there is also a geopolitical impact. But just compare it to geopolitical impact, which is right now in the forefront.
Oh, I'm so glad you brought that up, because I think that is one of the things that many people aren't thinking enough about, is how AI, that buildup there, has really helped fuel the market rally over the last couple of years. And now the step back is because of this massive change in the outlook for the margins or the return on equity. So suddenly now you have an increase in energy costs. Well, we know that how energy dependent a lot of those data centers are. We've also seen in the data, in terms of the producer price index, that the cost of manufacturing those data centers is increasing. And now if the cost of financing is also increasing, this becomes almost a triple whammy for them, where you have the cost of manufacturing the facilities going up, you have the cost of running them going up, and then also the massive competition, which has been affecting margins.
So beyond AI, which sectors are you focusing on when you really think about something beyond short-term volatility towards how this conflict could result in really path-altering structural changes, particularly in emerging economies?
Yeah, the areas that I really like are those companies that are more involved in robotics and automation. So I think it's what Elon Musk has referred to as the embodiment of artificial intelligence. And in order to really capitalize on that, I think it does pay to look at a variety of countries, a variety of sectors as to who's involved in the whole supply chain of robotics and automation. And then when we think about, let's say, with biotechnology, that's another area that I think is really interesting from a global perspective. Now, when we drill into emerging markets, I'm really interested in most of them, especially in Latin America and South America. We know that with the regime change in Venezuela, that has put a lot of countries, their leadership, on guard and trying to cozy up a little bit more to the United States. And so, in a way, you have to really fold into the financial analysis, the political analysis about who is it that's going to stay under the United States' good graces in this type of environment.
I guess the big question right now is when you think of how different emerging economies or markets react, the culture of investing really. What's the safe haven bet now? Is it Bitcoin? Is it gold? Is it US dollar? Is it AUD? Is it SGD? What is it?
Yeah, it doesn't really feel like there's much of a safe haven, except for gold has really, I think, proven that it is a safe haven. I'm a little concerned, though, that if all of a sudden we get a little bit of a calming of the relationship between the U.S. and Iran, just when we saw the announcement that Iran's security chief was saying that he was open to starting these diplomatic relationships or the dialogue again, could we suddenly see that fear trade really come out of the price of gold? Bitcoin has not been acting as any sort of safe haven, and I think a good reminder is that the people of Iran, they lost access to the internet, right? And so what good is a digital currency if there isn't this decentralized infrastructure to support it in terms of your internet access? So classic safe haven of gold. The dollar isn't acting like much of a safe haven. It's down about 0.5% year to date so far, more than 7% over the last year. And so it does kind of feel like maybe the kind of going old school in terms of gold, and then just really trying to look at countries like India. We're very optimistic about the outlook there. So in terms of on the equity side, but then on fixed income, we actually like a globally diversified portfolio of international bonds, not just U.S. bonds anymore.
Fascinating that you mentioned that. I just want you to dive a little deeper into one particular sector, which is clearly impacted, and that's the airline sector. And India is an example of that. Some saying close to 1,000 flights have already been cancelled from Saturday to Sunday and now Monday. But this is an impact that we're seeing across Asia. Just give us your insight on that.
Yeah, I'm reminded of in the 1980s, there was a CEO of an airline agency who basically said that he thought that an airline was a wonderful company to run and work for, but not invest in, just because there are always these issues that can pop up that affect their profitability. In the United States, we had this massive storms kind of rolling through that affected their profitability. Now we have these geopolitical issues that pop up affecting the number of flights. You have the cost associated with energy. How good are they at hedging those? There are a few regional providers that we have liked. Like if we look over in Europe, Ryanair is kind of a good example of a type of company that's run where, yes, they do have higher costs now with energy, but in terms of their regional exposure about where is it that they fly to and the flight disruptions. So it really does require, I think, that company by company analysis and not just buying like a broad-based ETF that's buying the entire sector, because the entire sector is going to likely be buffeted by events like this.
All right, Brian Jacobson from Annex Wealth Management, thanks so much for joining us. I really appreciate that. And as we just slip into a short break, I just want to bring up very quickly what's happened with the Nifty 50 as pre-open trade has begun. It's quite something. We're down about 2% or more, really. And we're also seeing that Indian oil marketing companies, their shares have fallen between 3.3% and 4.5%. We'll bring you the latest on that in just a bit. We'll discuss also the geopolitical impact of the latest developments in the Middle East. Stay with us. Welcome back. The U.S. State Department says that State Secretary Marco Rubio will brief the House and Senate leaders on Monday afternoon. President Trump ordering the strikes on Iran without congressional approval. Lawmakers in the U.S. are now questioning whether the White House has a plan for what's next after the death of Ayatollah Ali Khamenei. CNBC's Emily Wilkins has more in this report.
Members of the U.S. Congress are looking to potentially exert their power over Trump's ability to continue strikes in Iran next week when they vote on a War Powers Act that would require Trump to come to Congress before any additional strikes. However, while there are a number of members on both sides who are looking to break ranks with their party, the measure at this point doesn't seem like it will be able to pass, and if it does, will be unable to survive a veto threat from President Trump. But it will be the first time that members are on the record with what they think about the strikes in Iran. The votes will come after lawmakers receive a briefing from Secretary of State Marco Rubio, Defense Secretary Pete Hegseth, and others. That briefing is expected to take place on Tuesday afternoon, and lawmakers have already begun voicing a number of questions about the strikes, why they happen now, and what the overall goal is. The top Democratic senator on the Intelligence Committee, Mark Warner, who was part of a small group of members that was briefed last week, said that he's seen some changing reasons from the Trump administration as to why the strikes are occurring, and he wants a better understanding of what the path forward with the U.S.'s involvement in Iran is going to be.
Does this mean we're going to have to put American boots on the ground if the Iranian people rise up and the regime starts to brutally murder them? Have we now started another endless war in the Middle East where we are going to get further drawn in? And what is our ultimate goal?
Members on both sides will be receiving the briefings, and members from top committees dealing with intelligence and defense will receive another briefing tomorrow at 4 p.m. Lawmakers return to town on Monday and Tuesday and are expected to then take those votes on the Iran war powers. We'll be keeping a close eye on how this issue continues to shape up for both lawmakers and the American electorate, especially as midterms primaries begin kicking off on Tuesday. Emily Wilkins, CNBC Business News, Washington.
It's been a minute since the Indian markets have come online. Nifty 50, the world's largest population. We're looking at how the market has reacted. Nifty 50 futures suggested in pre-open trade that it would be about 24,600, but it's actually closer to the 25,000 mark, but fallen below the 25,170 or so that it was at. And we're looking at the rupee. It is weakening against the US dollar as expected, but there are traders who are banking on the central bank for some kind of support and intervention. We'll come back to that through the day, but let's also look at oil majors in India. ONGC and Oil India are the two bright spots as expected, as they are the upstream oil companies that benefit from higher oil prices. But take a look at the other stocks, and that's where the concern is. They're all in the red, close to about 5% nearly, and we're watching Bharat Petro, Hind Petro, that's HPCL and IOC. Now, Indigo's parent, Interglobe Aviation, is a big concern as 60% of the aviation market is really in their hands, and you're looking at them down about 5% nearly. Of course, Air India not listed, but definitely coming under pressure. Several flights, hundreds of flights really cancelled related to, of course, Air India, which flies a little bit more internationally than Indigo does. But we'll continue to track that. And India is an interesting position when it comes to the latest developments in the Middle East. We do want to hear from Jacob Shapiro. He's a strategic partner, geopolitical advisor of the Bespoke Group, and he had some interesting points to make about India when you think about everything that's happened in Iran.
You probably remember last week, the big news was that Narendra Modi was in Israel for a huge meeting. It was a big bromance moment between Benjamin Netanyahu and Narendra Modi. And you can't convince me that Israel didn't at least give India a heads up here. And who is the biggest competitor in terms of market access and influence and some of these other things in the new Middle East, where the United States is a net energy exporter? It's India. And India aligning itself here with Israel.
All right, we're joined now by Shahram Akbarzadeh. He's the Director of Middle East Studies Forum at Deakin University and non-resident Senior Fellow, Middle East Council on Global Affairs. So perhaps a great voice to have on this occasion. I really appreciate you joining us. I want to start by the comments that were made by the guest that we just heard. Prime Minister Modi visiting Israel at this time. There was some criticism within India. He met the Prime Minister Benjamin Netanyahu of Israel just about 1 or 2 days before the attack. And he called on Netanyahu also. He made a phone call reiterating the need for an early cessation of hostilities. But what does this mean? Because is this India positioning itself as a global South leader or really scrambling to position itself as such?
Thanks for having me, Amitaj. I think that's exactly right. India has had good relationship with Israel. India has not condemned the attack. In fact, India has been quite supportive and understanding of Israeli concerns towards Iran. But asking for a measured response, asking for an end to hostilities is diplomatic talk, which one would expect.
All right, then let's just switch to what's happening in the U.S. because lawmakers will vote on the War Powers vote this week. This would determine whether President Trump actually needs congressional approval, but they will get briefed by the Secretary of State And Trump can also veto this even if it is passed, which is unlikely. So how significant will this exercise be in Congress, and how should the world look at that?
I think it's significant that this is being discussed in the U.S. by the U.S. Congress. I think the Democrats are really trying to exert some level of influence and power and put the brakes on Trump's policies. But the experience that we have had is that President Trump doesn't need that level of support. It doesn't need the Congress. He feels that he can make decisions, declare war even without congressional approval. The fact that he went into this conflict with Iran in partnership with Israel tells you a lot about the level of planning, advanced planning that was behind the attack, and the fact that he chose to ignore the Congress and not alert the Congress that he is doing it. So it's significant that Democrats are trying to exert some level of influence, but at the end of the day, Trump will do what he wants to do.
I mean, the Gang of Eight was briefed, but let's just talk about the justification for this, according to analysts, is that Iran's negotiations, they could not be trusted, and that this was the weakest Iranian regime that it has been for, well, decades. So this was really the time to act for the U.S., and that's what we are hearing from the U.S. too. So I want to understand from your point of view, what kind of geopolitical or domestic backlash could force Trump to move away from the region?
You're quite right that this has been the weakest. We have seen the weakest point in Iran's geostrategic position. The fact that Israel managed to undermine Hezbollah, the fact that Hamas is decimated, the fact that Syria is lost to an anti-Iran force, all of that signaled that this was the right time for Israel and the United States to hit Iran. Now, so obviously, this is causing major upheaval and insecurity in the whole region. We know that GCC states have been hit. We know that they were lobbying the United States before the attack not to engage in military operation because they were afraid of this kind of consequence. So I think now they will continue talking to Washington, continue urging Washington to find an end to the conflict. I don't see how those kind of voices will convince President Trump, because President Trump needs a visible win to show for his efforts. He can't just stop fighting and not have anything to show for it.
What does that look like, that visible win?
Well, a statement of submission by the authorities in Iran would be one, but I don't see that coming. Yeah, it's really hard to tell what that visible win would look like.
I appreciate that. Now, you mentioned the Gulf region, and you suggested that, well, most of them will probably ask President Trump to, well, water it down in a sense, pull back a little bit. But the UAE has withdrawn its ambassador in Iran. It's closed its embassy. The Saudi Crown Prince, MBS, engaged in several private phone conversations with Trump last month, advocating for a military strike on Iran, despite publicly supporting diplomatic solutions. And this has been reported by the Washington Post. So how do you read this in the context of the extent of the regional war, that there may come a time that they actually join the U.S.?
Well, I think the opinion among policymakers in GCC is somewhat divided and a bit confused as to what the best way is to manage Iran. We know that prior to the war, relationships between GCC member states and Iran was improving. We know that Iran was trying to mend fences with its neighbors, and we know that Iran saw having GCC members in its, on its side, in its court, would undermine U.S. prospects of attack. That hasn't worked out the way Iran wanted, and now Iran sees the conflict as an existential threat. As a result, it's hitting at all GCC member states that house U.S. bases, and in the process is alienating all its neighbors. So the implication of this, the consequence of the Iran response to a U.S. attack is that Iran is losing all its friends, burning all its diplomatic bridges with its neighbors.
Okay, quickly about China, let's get into that. Does this derail Trump's visit to China later this month? And I ask this question because one has to wonder, at what point does China even think about getting involved militarily?
No way. I don't believe China would get involved militarily in this conflict. China has a modus operandi that is engaging with the United States at the United Nations Forum, protesting U.S. behavior and U.S. violation of international law, which it has done, as has Russia. But China has a lot more at stake to really risk that. China has close economic ties with Gulf countries, with GCC, with Iran as well. And China is not going to jeopardize its economic interests by really engaging any kind of adventurous military operation against the United States.
All right, we'll have to wait and see if it at least derails Trump and Xi Jinping's talks later. Thanks so much for joining us. That was Shahram Akbarzadeh from Deakin University. Now, that's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next, and there's so much to cover. Dan Murphy will be right with us in just a bit.